As quarter two comes to an end, so does 2018. I'm going to unpack some of the stats for the November trends. I'm Rob Covino, and this is Mirus Industry Analysis December edition. Average daily subsidy saw all three cohorts increase for the month, bringing the industry ADS up to about 178. Occupancy was a bit mixed across the board, with all cohorts declining for the month, with the industry falling below 92% for the first time. Well, for the month of November, we have seen mandatory claiming activity decline across all three segments. However, the for-profits and private operators continue to lead at about 11.5% of all mandatory claims and claims being submitted during the month of November. However, if we unpack this and look at the voluntary claiming across these segments, we've seen for the first time the not-for-profits actually out-claiming the for-profit and private operators. They were leading up from 2.8% to about 3.2%, whereas the for-profit and private operators declined slightly to 3.1% of all actv claims being voluntarily submitted in the month of November. As a result of the mandatory claimings declining slightly, we saw the pool of addressable actv claims slightly grow across the industry. The not-for-profits having, for the month of November, 37.1% of available claims that are outside of 12 months or more, which can be addressed through some form of voluntary claim. But as an industry goes, the industry has about 33.9% of addressable claims for the month of November. In our new actv versus departed actv averages, this is where we look at the incoming or average incoming actv scores of all newly admitted residents versus the average of all outgoing departed residents. We saw all three cohorts roughly unchanged, but for the first time in a while, the private operators have slightly declined, meaning that the incoming residents are slightly lower than previous. We'll unpack this a bit more when we look into the occupancies, but it is suggesting some trends occurring within occupancy across the for-profit private operators. Within the complex healthcare trends, we have seen the 4B utilization grow continuously over the last 6 months. For the month of November, though, we have seen all three cohorts increase slightly, with the private operators still leading at about 47% of claims having a 4B associated complex healthcare procedure attached to it. Within the other area of complex healthcare, the claim that represents acuity of residents, the pressure area care claim, we also have seen that procedure grow across all three cohorts as well. The private operators continue to lead with about half of their claims, or 46%, having a pressure area care claim associated with it. We watch this procedure because it does indicate the acuity level of residents within Australian nursing homes, and as a result of that growing, we can also see links between an overall ADS as well as the technical nursing procedures within. Within the workforce data, we measure care hours and non-care hours on a per bed per day basis. And for the month of November, we have seen a slight retraction in the care-related hours from 2.63 hours per bed per day to 2.59 per day. That's about 1.5% decline, whereas the non-care hours also declined slightly by about the same percentage basis, 1.5%. If we unpack the care hours, though, and look at it through different resources within the care hours, we have seen both RN hours and enrolled nursing hours increase, with RN hours up about 12% and the enrolled nursing hours up about 3%. AIN and agency hours have both declined, with agency dropping the most in the period for about 20%. Well, following from the November segment, we did unpack a bit more about the occupancy trends within the industry. And we can see that we are still in a declining trend with the occupancy levels in residential aged care. However, for this month, I've overlaid some additional insights to this, such as the release of home and community packages, as well as the ACAR package rounds. And we can see the industry is continuing to absorb these, as well as the media spotlight of the Four Corners and the Royal Commission. We are now at below 92% of the occupancy and still declining. As a result, we are encouraging providers to continue to think about the customer acquisition strategies, thinking about how they engage with consumers and how they have their digital assets representing the best of what their organization and the values that their organization continues to deliver in a residential aged care manner. The data you see is a sample report, and if you would like to continue along and receive your own organization's data to follow along with this conversation, please don't hesitate to reach out by the links provided. And lastly, we wish all of you at Mirus Australia a happy and prosperous holiday period. For those who are working and continuing, please keep doing what you do, and we look forward to seeing you in 2019. I'm Robert Covino, and this is Mirus Industry Analysis, December edition.